Evening, I hope you're doing well. Today we'll be talking about the stock Dr. Reddy's because it is in the news for seemingly the wrong reasons. We are fully aware that Dr. Reddy recently was issued a notice by Canadian health authorities over the semaglutide compliance, which is actually their medication or drug for diabetes and weight loss management. But before we discuss the impact of this development on the stock, we'll first just briefly talk about Dr. Reddy's. This is a 4-decade-old company, Indian company, which, as we can see, has brought tremendous value and profitability to its investors, shareholders. And generally, such companies which bring this kind of profitability and value to its shareholders benefit the society at large. Dr. Reddy's is one of the largest players in the healthcare industry, pharma industry, and broadly has, let's just say, four verticals. One of them is the API or the active pharmaceutical ingredient vertical, which is basically the raw material for drugs. They work in that domain. Other than that, they are into biosimilars, there are generics, and of course, they are into diagnostics. The company has not just an Indian presence but a global presence. It is a net exporter, exports to over 80 countries, but almost 45% of its total revenue is contributed to by the US and the Canadian region. Now we have to see. Now let's try to understand the regulatory update. So regulatory, the say for example the FSSAI in India or the FDA in the Americas or NVISA in Brazil, etc. These regulatory bodies are actually an extension of the government, and objectively what they're supposed to do is they're supposed to assess a business unit, its product, its process, its plant, and the people. And usually the compliance is issued in one of these four cases. So either the product is faulty, or the process of manufacturing or distribution is faulty, or the plant is faulty, or the people are not trained. Therefore, most of the inputs are around this. And usually when a company issues a compliance or an observation, the companies who receive this they are also given some time in which necessary corrective and preventive action is taken. Necessary SOPs are modified, and these corrective measures are implemented and presented to the health authorities again for continuous selling of drugs. In real time scenario, what happens is usually if a company is approved by or a plant is approved by, let's just say, the US FDA or let's say the EU MHA, then in such a case these companies get an auto export license, say for example to the Latin American regions or the African regions. So therefore an approval from some of these health authorities is very useful. The reason is that LATAM and Africa receive a lot of medications through donations, and since the institutions that are donating this money for the purpose of procuring of these drugs are usually European, Japanese, etc. Therefore, the approval by their regulatory authorities automatically implies that the company can export its products to the rest of the world as they speak. Also, it's well known that the Northern American region is a good customer, a high-paying customer, and therefore that region alone contributes to almost 45% of its total market share, although the company exports to 80 plus countries around the world. Now, with that backdrop, when a compliance issue is noticed by one of the major health authorities in the world, it can never be very, very good for the company, or particularly if it's a major market for the company. And it is generally expected that the observations will be objective. That is, they genuinely find some gaps, and these gaps necessarily impact the product, which in turn necessarily impacts the customer, and therefore those recommendations have been suggested. But due to not so great geopolitical relations with some of these countries, Canada included, it is possible that some of these observations are simply politically driven. In such a case, the company cannot do much because the observations are not objective, cannot be implemented, and therefore the company simply has to wait it out and see or hope for a turn of things. They'll obviously attempt. So this is the context in which we have to see observations coming from US FDA or Canadian health authorities. We have to see this on the lines of a conscious attempt to, or conscious effort from their side to reduce their dependence on Indian products. So if we look at this particular chart, we obviously see that this chart has been in an uptrend, but the key characteristic of this chart is the deep pullbacks that have happened in the process of this uptrend. And when a security shows deep pullbacks along the process of its uptrend, it is fair to assess that this is at best a bullish weak stock. Particularly since 2015, the extent of pullbacks have been very deep. Prior to that, the pullbacks were significantly shallow and it was behaving like a strong stock, bullish strong stock. But now the trend is definitely changed, or the structural trend is definitely altered to that of a bullish weak stock. And in true characteristics of a bullish stock, it did create an all-time high. We can clearly see where the cursor is placed at say 14, 15 levels. The stock split and the chart is adjusted for that split. So we do have an all-time high. I'll just mark this here with, let's just say, a red line. And I'll darken it a bit. The issue, however, is the occurrence of this low, this low here, right? Now, the issue with the low is that this is in a sense a lower low from a previous pivotal point. And okay, one could argue whether the previous point is indeed a pivotal point or not, but definitely one will not argue that it is forming a double bottom with this point here. And we know that securities which form double bottoms are actually now no longer trending, but they are ranging. In other words, the bias for this particular stock will be either bullish weak, this is a bullish weak stock, or this is a ranging stock with a long bias. So regardless, with that kind of a view, we obviously, if we take up a position on the stock, we want to be on the long side. We want to be on the long side when the stock becomes highly oversold. And do we want to invest in this stock? Then the question is, we would want to invest in the stronger stocks of the particular vertical. So for example, if I have a Dr. Reddy which is clearly bullish weak, I will have to assess it with, say, for example, Cipla. This is also bullish weak. Maybe there is Apollo Hospitals, which is also a large cap stock, and here we have a bullish strong stock. So when I make this assessment across the entire pharma index, then there is a possibility that Reddy is not going to, despite a rich pedigree and many other positive things, this might not rank the highest. This will come somewhere in between, like weaker stocks than Dr. Reddy could be something like, say, a Biocon. This is clearly in a range. We can see that it's still trading below its 2020 highs. Of course, it's forming saucer and so on, but those patterns are not applicable for us because we need a trending security first in order to at least it should be bullish weak. But this is so when we basically have a large range of options, it becomes our job to assess all the stocks before we take up a decision. The purpose of this video is just to see Dr. Reddy in isolation and not compare it with its peers. So the point being that this particular stock looks like it's ranging with a long bias, and therefore I would, if at all, if I would trade it, I would trade it on the long side, and I would do so when the stock becomes highly oversold. With this assessment on the weekly, which is usually our first step in assessing a chart when we see it for the first time, we move on to the on the monthly, we move on to the weekly in order to determine the areas of interest, and we can clearly see that the stock is in between a very, very large range. And when a stock is in between such a large range, generally we do not want to act. The other point that I would like to make is that we are obviously seeing multiple lower tops, and whenever we see that, we just connect them. And when we connect them, we can see that this is an early sign of an inverted head and shoulder. And because of these early signs of an inverted head and shoulder, and the region where it is, that is precisely this point, was the breakout of a previous W pattern. So the region is interesting. It is forming an inverted head and shoulder, but like I said, it is so far away from the head and shoulder resistance and so far away from the critical support that this is almost moving in a no trade zone. And therefore this stock does not in principle excite me that much at these current levels. Perhaps if I had a chart looking like this at this point would be exciting me, because it shows a rich potential of taking out maybe 2% move, and it could take it out. But after the correction, now the chart definitely is no longer that exciting. So perhaps for Dr. Reddy, based on what I'm seeing, I'm most likely, if at all, I'm most likely going to react with a lot of enthusiasm at these levels, which I'm marking now, which is the previous high 1375. If it takes it or comes near these levels, there is no ambiguity that I would be very enthusiastic about being long on this particular security. I would similarly be long at say 1044 levels, 1050 levels. But I wouldn't be so enthusiastic. I would take targets on this stock at critical resistance. Whereas if in the first case, if I am buying on the breakout, then I would expect a stronger move, and I would plan the trade for a longer target. So obviously, once the stock does not excite us enough on the monthly, does not excite us enough on the weekly, there is little reason to assess it on the daily other than just the academic interest. And in this, we can see a breakaway gap today based on the news. It's obviously at a support, but I wouldn't call it the strongest support in the world, but it is a reasonable support. That's the trick with range. When a stock is in a broader range, many points look like supports and resistances. But discipline in trading is to act at the extreme points of the range. So point being, if I were an option writer, I would be shorting this stock's call option of say 1350 call and a 1050 put at the current 1200 levels. Obviously, in real market, in practical sense, you are not going to find any liquidity on either of these ranges that I've spoken about. You're going to find liquidity at say somewhere around 1240 on the upside and maybe 1180 on the downside. But if our markets were very liquid and if we could actually implement things, then I would just keep shorting the 1350 call and the 1050 put option for many months on the stock. Whenever it would come at the midpoint of the range. So an option writer typically would want to act on the middle of the range, but as an option buyer or a futures trader or a directional trader, we want to make sure that the range is either breaking or that the point is at such an extreme point of the range that there is reasonably high theoretical upside, even if we are value fishing. So sum and substance is that this is obviously a good pedigree stock. If one has in their portfolio, I think patience is warranted, because this is a stock in a bullish weak trend, and such stocks show characteristics of deep pullback. And I would just like to draw your attention to one more point that I had made when I was analyzing the Nifty a couple of weeks ago. I had mentioned that securities which form cup and handle, such as here we can see, if I just connect these 2 points, right? So a security which forms like a cup and handle or a saucer pattern tends to do this on multiple occasions, and so these are multiple saucers. So it's in the nature of the security to form a saucer pattern, and securities which form saucer patterns, saucers are difficult patterns to trade because their lows are very unpredictable. And therefore, when a security is forming a saucer pattern, it warrants patience. And the best way to be patient in a stock is to either not own the stock at all, or to have very low quantity on that stock. Your higher quantity should be towards the stronger trending stock, so that there is movement in your portfolio, or at least you're setting up the portfolio for a larger movement. So with this, we used the news flow, the recent news flow, in order to shortlist the stock and to use the chart in front of us in order to discuss a few points on technical analysis. I hope that the video has been educative for you. I would like to thank you for the comments, the very kind comments that most of you are writing, and obviously I will reply to them either through a reply back or through a follow-up video on one of those comments if I feel that it's important enough, or that question could be common enough for many more in the audience segment. So thank you for your time and patience. I'll see you soon.